The last theme is going to be earnings because we're right back into earnings season. Earnings happen once a quarter, 4 times a year like clockwork. So if you're going to be doing this for real, right? If you're going to be consistently trading over 3 years, 5 years, you absolutely need a way to trade earnings. So we trade earnings the exact same way every single time earnings season comes around. It's what I teach in my Elite Earnings Academy. It's one of my most popular courses. The way that we trade earnings is we use a back tester to back test previous earnings dates. And then we want to see how much the market moved or how much the stock moved after the earnings were released. We also want to go back and see the pre-earnings implied move. This is before a stock announced earnings, what was its volatility traded at? The implied volatility is what the volatility is in the market. Historical volatility is what the volatility has been in the past. And theoretical volatility is going to be my volatility, where I think that the option should be priced based on whatever way I want to analyze it. That's my theoretical volatility. So if I know, going back to 2017 ROKU, that the pre-earnings implied move was 17%, 23%, right? I could take all these, and the average is going to be about 17%. Okay? The max that it moved going back to November 8th is 56%. But on average, it moves about 26.53%. Whether up or down, right? So green, I made ROKU November 8th, moved 56% higher the day it released earnings. The final move was 54%, okay? So the average max moves 26.53%, but the market only prices in 17% movement. So historically, if you would have been a buyer of options, buyer of straddles or strangles, calls or puts, every single time ROKU announced earnings, if you would have bought the straddle before, you would have made money this time for certain. You would have annihilated it. This time, you would have been challenged to break even. This time, you would have lost money because it priced in 17%, but the darn thing didn't move at all. So this thing is bad, bad, bad. This one you win, this one you win, this one you win, this one you win. Okay, because we look at the max move. This is the expected move. This is the max move. Right now, ROKU is expected to announce their earnings on August 7th, 2019. Right now, the pre-earnings implied move is 19%. How much will it move after? Who knows? How much will it move after? Who knows? But what we need to do is we need to answer the question, do we think ROKU will move more than 19% by the time these options expire in 33 days? Can ROKU move more than 19% or 20%? That's the question that we have to ask. One of my coaching clients built a really cool indicator that we use in the coaching program. And it just shows us where the straddle is, where the break even of the straddle is. And historically, the straddles. So here you can see the straddle, it really broke out after the earnings, right? Here's the earnings. Look at the breakout. Here, look at the breakout. Here, so every single time, ROKU, going back on this chart, the last 4 have moved more than the options have priced. So we'll go over this trade in class, but I personally think if there's 33 days to go until expiration, ROKU, how much does it move per day? ROKU moved $3 between its high and its low, right? 105 minus 102. It moved $3 on Friday. $3 is about 3% of movement. So let's say it moves 2% a day or 1% a day. Well, that means that for 32 days, not counting the earnings days, it's moving 2% per day. Okay, so what does it move in those 32 days? 10% maybe? 8%? Let's call it 5%. Let's call it 5%, and let's say the earnings should be about 20% expected movement. Well, if the earnings are 20% expected movement, on average it's 17%, but we know it moves more, so the market is going to price in more expected movement. If we think this should be 20%, and then if we look at the 32 days that are not earnings, right? 33 days, so there's 32 that are not earnings, 1 day is earnings. The earnings day, we give 20%. The 32 days, I don't know, let's give 5% of movement over 32 days. Not a lot, right? We could say 10%, but I want to show you how undervalued this is and why we do this kind of analysis every single earnings season. So right now, we might say that the implied move should be closer to 25% for ROKU. But the implied move right now is 20. Up or down, 20 is about 20%. If we think that it should be closer to 25%, we want to be buyers of options. So that's why ROKU is on the spreadsheet. I wanted to share 1 or 2 names with you guys. I'll go over these trades tomorrow, and then we're going to have our Elite Earnings Academy later in the week.